Interest rates are set to rise as inflation takes hold. Bank of England, Fed, Australian Central Bank, all reviewing their interest rates, and already emerging markets, Chile, Brazil, to name but two, have got interest rate rises on the agenda. Goldman Sachs said that interest rates weren't going to rise to 2023. Now they're saying it's as close as next year, 2022. They're saying interest rates are going to go up. Inflation is more permanent than expected. Inflation is occurring in wages, and that's really what's concerning. People thought that it was a supply chain breakdown. In fact, Boris is still talking. It's a supply chain breakdown, but it's not just that. You've got wage inflation in most countries around the world, and America last month saw a 1.5% increase in the month in wages. That's the highest since 2001. Wage inflation means that companies have to put up the price of goods. And of course, the more the price of goods go up, the more people want higher wages. So central banks have to do something about it. Right now, they're still printing money. They're going to ease that off, certainly in America for sure. Interest rates to rise. Australia will put it certainly on the agenda, and so will the UK. They want to make sure they nip it in the bud. What do I mean? If you just get a 0.25% now, it's better than leaving it for a few months and you have to have a 0.5% or a 1%, because you've got to put the brakes on harder. You need a gradual rise in interest rates, not a sudden one. And causing the jerk. You imagine driving and the guy's banging the brake. Okay, well, same thing with interest rates. And gradually smooth the economy in the right way. Tough, of course, because some people think that this is still transitory. In fact, Kathy Wood, who's one of the top fund managers in the world, says that right now you've got automation happening. And whilst you've got wage inflation and you've got a supply chain breakdown, you've also got automation, and AI will ultimately mean deflation. Jesus, it's the biggest drag on inflation ever, and expect inflation to drop suddenly. Okay, so central banks, what do? Okay, right now they seem to be going for the brake, trying to slow it down a little bit just to make sure that the economy doesn't jolt too much. Of course, it may be that they need to ease again, because if Kathy Wood's right and there's deflation, they actually have to go back to where they are today. Egg on their faces if that happens? Maybe. But right now, caution is more likely. And that means interest rates rising. That means that mortgages go up. That means that people need to be knowing where to invest. Always talk to a financial advisor. Always make sure you take financial advice, because you need to be in the right places, right time to get the best returns. Hit subscribe, hit like, please share the video. Helps me get out information on a daily basis, what's happening in the financial markets and how to be successful in life and how to make money by investing and using it to its maximum effect.